The American housing market in 2025 is facing a severe collapse, shattering the long-held dream of homeownership. Once booming real estate hotspots are now turning into financial nightmares, with property values plummeting at record speed. Homeowners who purchased during peak pricing are seeing between $70,000 and $150,000 in home equity vanish almost overnight, leaving families trapped in upside-down mortgages. Across suburban neighborhoods, for sale signs linger like abandoned relics, symbolizing stalled demand and a flooded housing inventory. At the same time, skyrocketing insurance premiums, rising property taxes, and soaring mortgage rates are squeezing household budgets to the breaking point. Foreclosure filings are climbing rapidly, echoing the devastating housing crash of 2008. Only this time, experts warn, the downturn may be even more destructive. This isn't just a slowdown, it's a housing market crisis in 2025. In this report, we'll break down the top 10 worst cities to buy a home in 2025. Number 1. Sacramento, California. From safe haven to housing bust. Once marketed as the affordable alternative to San Francisco, Sacramento's housing market in 2025 is unraveling at alarming speed. Just 3 years ago, the median home price hovered around $525,000. Today, sellers are cutting deeply, with prices falling into the low $440,000, a 16% drop, erasing nearly $85,000 in equity for homeowners who bought at the peak. The inventory surge confirms the slowdown. Active listings are up 38% year over year, and homes now sit on the market for an average of 70 days, compared to barely a week in 2021's buying frenzy. Sacramento's once competitive bidding wars have vanished, replaced by empty open houses and anxious sellers. Carrying costs are crushing budgets. Property taxes on a median-priced home top $5,000 annually, while wildfire-driven insurance premiums have jumped over 30%. Combined with mortgage rates near 7%, monthly payments that were once $2,200 have ballooned to $3,000 to $3,200. Investor demand has also collapsed. Purchases that made up 25% of the market are now in single digits, and even rental investors are squeezed as average rents stall at $1,700 while expenses rise. For families and investors alike, Sacramento has shifted from a pandemic-era refuge to a housing market crash zone, echoing the warning signs of 2008. Number 2. Jacksonville, Florida. From hidden gem to housing nightmare. Jacksonville was once marketed as Florida's undiscovered gem, but in 2025, its housing market looks more like a polished disaster. Just 2 years ago, the median home price peaked near $350,000. Today, values have sunk into the $290,000 to $300,000 range, an 18% collapse that has drained homeowner equity at record speed. The biggest problem is oversupply. Between 2020 and 2023, builders went on a massive construction spree, flooding Jacksonville with thousands of new homes. Now, many of those subdivisions sit half-empty, lined with price-reduced banners. Discounts of $25,000 to $40,000 are common, yet inventory has swelled to 6.5 months of supply, well above a balanced market. Insurance is Jacksonville's silent crisis. With major insurers pulling out of Florida, premiums that once averaged $2,500 annually now top $5,000 to $6,000 for a modest home. Add in property taxes of roughly $3,500, and ownership costs have skyrocketed. Families who budgeted $1,800 per month in 2021 are now facing $2,800 to $3,000 bills, forcing many buyers to retreat. Rental investors aren't spared either. Average rents have stalled at $1,600 while expenses soar, pushing landlords into losses. Foreclosure filings are already up 20% since early 2024, signaling deeper pain ahead. Jacksonville's growth story has flipped into Florida's housing crash epicenter. Number 3. Houston, Texas. Affordability turns into a housing trap. Houston once prided itself on affordability, but by 2025 that reputation has collapsed. In 2022, the median home price peaked at $345,000. Today, prices are struggling to stay above $295,000 to $300,000, marking a 15% drop in billions in lost equity across the metro. The supply surge is staggering. Active listings are up 42% year over year, with more than 30,000 homes sitting unsold. Builders who flooded Houston's suburbs with new construction during the boom are now slashing $20,000 to $50,000 off new homes, yet inventory still lingers 75 to 90 days on the market. Carrying costs are crushing buyers. Houston's property taxes are among the nation's highest, with effective rates around 2.1%. On a $300,000 home, that's over $6,000 annually, before factoring in insurance. Flood insurance premiums that once averaged $1,200 are now spiking past $3,500 to $4,000 as FEMA adjusts its risk models. What once cost $1,700 a month has now ballooned to $2,600, shutting out many buyers. Investors aren't spared either. With average rents stuck at $1,600 to $1,700, landlords can't offset ownership costs. Foreclosures in Harris County are up nearly 18% since 2024, and delinquency rates continue to climb. Houston's "everything's bigger" motto now applies to its housing crash: bigger equity losses, higher taxes, and skyrocketing costs, proving even America's energy capital isn't safe from a real estate reckoning. Number 4. Austin, Texas. From boomtown to bust. Austin was once America's golden child of real estate, fueled by tech jobs, rapid growth, and soaring demand. But in 2025, the city has become a housing crash cautionary tale. In 2022, the median home price topped $550,000. Today, values have plunged into the $470,000 range, a 15% drop that has wiped out tens of thousands in homeowner equity. The biggest problem is oversupply. Developers flooded Austin with new subdivisions and luxury condos during the boom. Now, listings have surged nearly 50% year over year, leaving the metro with almost 7 months of inventory. Homes that once sold in days with multiple offers now sit 80 to 100 days on the market, forcing price cuts of $30,000 to $60,000. Carrying costs are crushing affordability. Property taxes in Travis County average 2.2%, meaning a $470,000 home racks up more than $10,000 annually. Add insurance costs around $3,000, and today's higher mortgage rates and monthly payments are soaring past $3,500, up from just $2,400 in 2021, a 45% increase with no wage growth to match. Investors are bailing fast. During the pandemic, nearly 30% of Austin's home sales were investor-driven. Now, flippers and landlords are unloading at losses as rents stall around $1,900 to $2,000. Foreclosures are up 25% year over year, and distressed sales are climbing. Austin's boom has turned into a bust, proving that even tech-driven housing markets aren't immune to collapse. Number 5. Tampa, Florida. From boomtown to housing bust. Tampa was one of Florida's hottest housing markets during the pandemic, but by 2025, the boom has collapsed into a fire sale housing crisis. Just 2 years ago, the median home price peaked near $410,000. Today, values have plunged into the $350,000 to $360,000 range, a 12% to 15% decline that has erased equity for thousands of homeowners. Buyers who purchased at the top with 10% down are now effectively underwater. The inventory surge is alarming. Tampa now sits on 8 months of supply, compared to just 1.5 months in 2021. Active listings have spiked 48% year over year, with thousands of homes languishing unsold across Hillsborough and Pinellas counties. Days on market have stretched past 75, and price-reduced banners dominate both resale and new construction listings. Ownership costs are crushing demand. Property taxes on a $350,000 home exceed $4,800 annually, while hurricane-driven insurance premiums have ballooned to $5,500 to $7,000. Monthly payments that once averaged $2,000 are now $2,800 to $3,200, a 40% jump in just 3 years. Retirees on fixed incomes are retreating. Renters face stagnant prices near $2,000, and investors are fleeing. Investor activity, once 25% of Tampa's market, has collapsed, leaving flippers and Airbnb hosts desperate to sell. Foreclosures are up 19% year over year, signaling deeper trouble ahead. Tampa's sunshine dream has flipped into a financial storm, and the correction is only gaining momentum. Number 6. Fort Worth, Texas, a housing market in crisis. Fort Worth, once a symbol of Texas growth, is now among the most vulnerable housing markets in 2025. Just 2 years ago, the median home price hovered around $360,000. Today, that number has dropped closer to $300,000. A sharp 17% decline that has wiped out tens of thousands of dollars in homeowner equity. The inventory surge is even more alarming. Active listings in Fort Worth have jumped nearly 45% year over year, and homes that once sold in days now sit unsold for 60 to 90 days. With mortgage rates above 7%, affordability has collapsed, pushing many families out of the market. New construction has slowed dramatically, leaving half-built subdivisions scattered across the metro. Builders are offering discounts of $30,000 to $50,000, but demand continues to sink. On top of that, property taxes in Tarrant County remain among the highest in Texas, exceeding $7,000 annually on a $350,000 home. Pair that with skyrocketing homeowners. Insurance costs, especially in storm risk zones, and monthly payments have soared $500 to $700 higher than just a few years ago. As families list homes in hopes of cutting losses, Fort Worth illustrates how quickly a hot real estate market can turn into a housing crash hotspot in 2025. Number 7. Oakland, California. From Bay Area bargain to bust. Once seen as the affordable alternative to San Francisco, Oakland's housing market is collapsing under its own weight in 2025. In 2022, the median home price exceeded $820,000. Today, sellers are slashing values into the $700,000 to $710,000 range, a 13% plunge that has erased more than $110,000 in equity for recent buyers. The inventory surge is staggering. Listings across Alameda County are up 50% year over year, and homes that once sparked bidding wars now sit unsold for 95+ days. Nearly 40% of sellers have cut asking prices, with luxury properties slashed by as much as $200,000. Ownership costs are crushing demand. A $700,000 home carries nearly $8,000 in annual property taxes, while insurance often exceeds $3,500 in wildfire-prone or high-crime neighborhoods. Mortgage payments that once averaged $3,200 have ballooned to $4,700 to $5,000 per month, far beyond the reach of most buyers. The rental market offers no safety net. Average Oakland rent is about $2,500, well below today's ownership costs, leaving investors in the red. Vacancy rates in multifamily units are rising, and eviction moratorium aftershocks continue to scare landlords. Foreclosures are up nearly 20% since 2024, signaling worsening distress. Oakland's affordability advantage has vanished, leaving the city among the most overvalued and vulnerable housing markets in California, and a warning bell for the broader Bay Area. Number 8. Stockton, California. A familiar housing bust returns. Stockton has long been tied to California's boom and bust housing cycles, and in 2025 the city is plunging into another painful correction. In 2022, the median home price was $495,000. Today, values have dropped into the $420,000 to $430,000 range, a 14% decline that has erased nearly $70,000 in equity for recent buyers. The inventory surge is striking. Listings are up more than 40% year over year, and homes now linger on the market for 85+ days, compared to less than 2 weeks during the pandemic frenzy. Nearly 35% of listings show price cuts, with sellers offering incentives like $10,000 in closing costs just to attract buyers. Affordability remains a major strain. With San Joaquin County property taxes averaging 1.1%, a median-priced home still costs nearly $4,800 annually in taxes. Insurance premiums, once manageable, now often exceed $2,500 annually due to flood and wildfire risks. Monthly mortgage payments that averaged $2,200 in 2021 have surged to $3,200, pricing many families out. Investors are retreating quickly. Rental yields have collapsed, with average rents flat at $1,700, far below today's ownership costs. Foreclosures are up 18% year over year, reviving memories of Stockton's 2012 bankruptcy after the last housing crash. Once pitched as a hidden bargain, Stockton is again sliding into housing havoc, becoming one of California's most troubled real estate markets in 2025. Number 9. West Palm Beach, Florida. Paradise turns into a housing crisis. Once a luxury hotspot for retirees and out-of-state buyers, West Palm Beach is now one of Florida's hardest-hit housing markets in 2025. In 2022, the median home price surged past $480,000, fueled by Wall Street cash and migration from the Northeast. Today, values have collapsed into the $400,000 to $410,000 range, a 15% plunge, wiping out about $70,000 in equity in just 2 years. The inventory spike is devastating. West Palm now sits on 9.5 months of supply, compared to under 2 months during the 2021 frenzy. Homes that once sold in days now linger on the market for 80+ days, forcing sellers into steep cuts. Condo owners face even harsher realities as HOA fees soar above $1,000 per month, crushing affordability. Florida's insurance crisis is making matters worse. Annual premiums that once averaged $3,500 now top $7,000 to $8,000, while property taxes add another $5,500. What cost $2,200 per month in 2021 now burdens buyers with $3,300 to $3,600 payments. The rental market isn't offering relief either. With rents flat at $2,200, investors are underwater, while foreclosures in Palm Beach County are up 22% year over year. The so-called Paradise Premium has turned toxic. West Palm Beach is no longer the glossy Florida dream. It's fast becoming ground zero for one of the state's ugliest housing corrections. Number 10. Cape Coral, Florida. Ground zero of the 2025 housing crash. Cape Coral was once the poster child of Florida's boomtown fantasy, but in 2025, it has become the epicenter of America's worst housing collapse. In 2022, the median home price peaked near $430,000, driven by pandemic migration and investor speculation. Today, values have plunged into the $360,000 range, a 16% drop that has left thousands of homeowners underwater. The inventory surge is staggering. Cape Coral now sits on more than 11 months of supply, the highest in Florida, compared to just 1.5 months during the 2021 frenzy. Homes that once sold in a week now linger for 100+ days, and nearly 45% of listings show multiple price cuts. Builders are slashing $40,000 to $60,000 and offering free upgrades, yet buyers are still walking away. The real disaster is insurance. After Hurricane Ian and mounting storm risks, annual premiums that once averaged $3,000 to $3,500 now soar to $8,000 to $10,000. Add property taxes of about $5,000, and total carrying costs for a median-priced home have ballooned to $3,200 to $3,600 per month, nearly double 2021 levels. Rents, stuck near $2,100, can't cover costs, forcing investors to dump properties. Meanwhile, foreclosures in Lee County are up 25% year over year, signaling deep distress. Cape Coral isn't just cooling, it's imploding. The city that once symbolized Florida's real estate gold rush is now ground zero for the 2025 housing bust, a financial hurricane sweeping away both buyers and homeowners. So what do you think? What's happening in your local housing market right now? Are prices falling, insurance spiking, or is demand still holding strong? Drop a comment below and share your experience. I'd love to hear it. If you found this breakdown helpful, make sure to like, subscribe, and turn on the notification bell so you don't miss our next deep dive into the 2025 housing market. And don't keep this to yourself. Share this video with a friend or family member who's thinking about buying or selling this year. The more people understand what's happening, the better prepared we'll all be.